Hello, folks. Brandon Chapman with you today. It's another Monday video for August 12th, 2024. And boy, if we can call it a litmus test for this week, let's call it a litmus test. Looking at the unusual option activity, it looks like a stagflationary tone is setting in ahead of the CPI and PPI data. PPI on Tuesday, CPI on Wednesday. And we'll look at some of that trade that's going on today, as well as kind of the setup in the market. And just getting a sense of, okay, we're going to potentially move big out of this. The question is only direction, and it's setting up very nicely for a dollar response that could either be bullish or negative, that could really be a driving factor for markets this week. Now, if we look at the S&P 500, this is the S futures, the S&P E-mini futures. Notice how we've rallied off the lows. We came from our low in April. We rallied to our high on July 16th. Of course, we had Slurpee Day right there that spoiled the party for tech. The market's seen a correction. We're now back up against the wall at the 61% retracement line of the bullish trend over that period of time. This is a very typical retracement point for a trend, both bullishly in this case or bearishly. As we look at the downdraft here from the high on August 1st down to the low, notice where we're setting up right now. I guess I should bring up the Fib tool. Zoom in here. Go from high to low right there. The swing high to swing low. And notice where we're setting up right now. We're just above the 50% retracement, very close to the 61% retracement. Meaning what? We have very significant levels here at 54.23, the backstop at about 52.50. Maybe we draw it down here to 51.80. If we begin to break upward or downward below or above those levels, we're looking at a potential significant move in that direction. Now, one of the things that hasn't really perked up is the dollar, right? So if we look at the euro/US dollar here, the euro saw a nice little bounce back on the second, but for the last little over a week, we've just been hanging around kind of at this resistance around 110, 109.50 on the euro to the US dollar. So basically $9 for 1 euro. We back this out to a bigger picture and you start to understand where we're at. We hit the 61% retracement. We've backed off it. Since that point in time, going back to early 2023, we're in this diamond formation on the dollar. I could probably redraw this line off the high here, but point being is that we've yet to break out either upward or downward. Look at the range, 105 to about 112. That's about 7 points, right? 700 pips. We start to break down here. Could we see 95? Absolutely we could. Could we see $1? Yeah, that would be the projected area of support, or breaking above. We're looking at maybe 117, 118. Point being is the dollar's about to make a big move against the euro. How does this measure against gold? Now, gold is of relatively constant value. Well, we're seeing the dollars continued to lose ground against gold. When does it start to make up ground intrinsically? Well, it's probably going to take some dollar strength. It's going to take some deflationary pressures as risk assets start to sell off, as we start to see pressure, we start to see demand for dollars pick up to pay back some of those dollar-denominated loans, maybe in Europe or other parts of the world. Gold right now is within kind of a symmetrical triangle formation. We're testing the upper end of that range here today, and the only thing we need is a breakout kind of above this 228 level. What is going to bring that? It's going to take dollar weakness. What is going to bring the dollar weakness? It's all dependent on inflation. And so all of a sudden today, we're setting up in a position where we have two key data points, in particular on Wednesday with CPI, that could really begin to move the dollar. Why? Because we're looking at Fed rate cuts starting in September and accelerating going to the end of the year, maybe down 1% rate cuts, maybe 2%, 2.25% by next September. We're going to start to really begin to price in not just inflation moderating, but really we're beginning to price in the potential recession in the economy. Now, if inflation comes out hotter, this could really flip the script here and show the Fed has not accomplished its mission. It could diminish rate cut expectations precisely at the time we may be feeling still those recessionary pressures. This could create dollar strength and weakness in commodities. Well, as we look at what's going on today in terms of the option market, I'll show you kind of the results of my scanning here, and I'll sort by sector. And so what this will do is you'll just kind of see the stock symbols. But if we look at, you notice down here, GLD, GDX, we kind of scroll up here to materials, FCX. We've got SLV. We've got some stocks in there. Apparently not showing. Well, I guess this isn't pulling in everything. We've also got unusual option activity in gold stocks like New Gold, in IAU. We're seeing a lot of metals, particularly precious metals type trade today, that's signaling a bullish expectation for gold, gold stocks, and silver. Now, again, that would basically be thinking we're going to see inflation is going to come in below expectations. And if we look at what current expectations are in terms of inflation, we can see right here, CPI 0.2%, 0.2%. Those are the month-over-month numbers, core and headline. Virtually the same here for core PPI and PPI, about 0.2%. Notice last month we came in hotter than expected on PPI, showing more inflation in the pipeline that's going to come out the CPI side. We'll see. I mean, again, the previous was a 0.1%. We're expecting it to tick up. Headline inflation was negative. We saw some weakness in energy that helped contribute to that. But again, we're expecting to see inflation tick up from last month's print. We'll have to see how we play out here. But let's take a look at some of the story that's building in gold, for example. GLD, a couple of different trades here. One is out in the 20 SEP expiration. We scroll out, we can see what kind of call activity is there. And again, there's some that kind of stand out here a little bit. But for GLD for 20 SEP, we're looking all the way out at the 235 here. Now this is indicating less than the open interest. But my expectation, this is likely being bought. This was part of a spread trade. Yeah, it's part of a spread trade where they bought the 235, selling the 245. I'm expecting the open interest to build off of this. So we'll have to find out later. But it looks like a long call spread. Buying the 245, selling the 245, 39 days out. I mean, give you a perspective, 235, 245, it's looking for a rather significant breakout in GLD. Also in GLD, we also had the 18 oct expiration. So we kind of scroll down in here, scroll out to about the, we got to get out here a ways. Another spread, another call option buying at 280. Again, I mean, today at the 280 strike, there was some activity out here at the 305, was not part of a spread trade, but some of the activity aligned. So you'll see similar numbers, but it wasn't a spread trade specifically. But again, 280, where's 280? It's up here. I mean, are we on the cusp of seeing a major move in gold? It's very possible. Everything hinges on the dollar. But if gold performs like we're expecting, up 1.7%, S&P is basically flat on the session. What characterizes the current environment is stagflation, right? Rising gold, outperforming. You're seeing the dollar's getting crushed. S&P may gain a little, it may lose a little by virtue of dollar weakness based on, again, probably an overreactive Fed that's late to the party and may have to cut more aggressively. All right, let's look at GDX. So GDX today, we're looking at the 18 oct expiration again. So we scroll down here, 8,300 contracts, mostly bought at the $40 strike price. $40, where are you? It's basically above the most recent high on July 17th, up here at $40. So again, we're looking at potentially significant move in GDX. Again, part of that is NGD, New Gold, for example. Nice breakout today, up 7%. My session today, we kind of held off making some gold trades pending what we're seeing in the inflation markets, but then we saw more data come out, more trades come out, and you're wondering, man, maybe we should have done more there. But NGD, this is a SEP expiration at the 250 strike. We're seeing 28 contracts, 100 contracts, mostly bought at 250. Is 250 a huge move? No, but it provides a key gamma level. Start to break that, we may accelerate to the upside. Again, IAU, get another precious metals, gold stock, for example. We saw some heavy volume at support down here. What we saw is exhaustion on the part of sellers, basically buyers and sellers coming together, buyers winning the day with last Thursday's move, continued Friday, nice breakout today up 1.8%. So again, what does this represent? It's a gold ETF, just like GDX. We're up against resistance up here about 46.80, 47. But the trade today in IAU is for a 17 Jan. It's out there a little ways. Again, notice we're not just playing this week. They're playing out here longer. It's an indication of money flow. There's limited gamma influence here by this 54th, 150, 58 days left on an ETF, but it's a sign of money flowing in, and it's a sign of a relatively large move. $54 is way up here, isn't it? We're looking at a huge move potentially in IAU by January, which is basically representative of gold stocks. And if you look at the price action of late, what you're seeing is a kind of an ascending triangle formation of virtually equal highs and ascending lows. The range is 44.50 to about 47. That's what, about $2.50. At least gives you maybe a 49.50 target. The great thing about these kinds of stocks is notice the implied volatility. The implied volatility is rising as you move out of the money. It makes it very amenable. You can use GDX. You can look at maybe individual stocks, 39 days out, for example. You can buy, this isn't quite as advantageous until you get out towards the 39 strike, but you can buy the lower vol, sell the higher vol, creating a relatively cheap spread. Newmont Mining. This is the biggest gold stock, I believe, out there. Similar consolidation, a little higher high there, maybe more of a diamond type formation. We start to break here. Newmont, they've done a very good job of kind of riding off some bad assets. The setup here in Newmont is not too dissimilar from what we saw back here in 2014 and 15, where they kind of cut the dead weight and allowed their price to appreciate over the next couple of years. We'll see what they got here. But again, a big gold company, Barrick Gold as well, GLD. Again, no option activity necessarily isolate on these companies, but Barrick Gold up 9% today. These are the big boys in this space. We're seeing broad-based buying across all of these gold stocks. And also we'll look at silver. Silver today as well, seeing a little bit of a bid up 2%, well outperforming the S&P 500, even outperforming gold today at 1.7%, and silver up 1.9%. So again, can we get to 29? Can we get to 30? Again, if we start to see the dollar deteriorate and we move again, silver's a little bit more cyclical in this, so it may not be as natural in this position. But if we start to see a little more of a reflation trade, silver could really make a large move here. Gold may outperform if the market's more dour following the news coming out this week. But for SLV, the trade is for a 13 SEP, so we're not here too far. 13 SEP. And we look at the, on silver, we're looking at the 2850 strike, 27,000 contracts mostly bought out here. And again, we're seeing it significant upside expectations. 2850 gets you back towards the highs on Slurpee Day. That's 7-Eleven Day, folks. If you don't know, on Slurpee Day, July 11th, that's right when the carry trade, the yen, dollar yen carry trade began to unwind. And this may be setting up again for another downdraft in the dollar yen strengthening. But the question is, do we start to see more of an unwind? So we see a stronger dollar against other foreign currencies, weaker dollar against the Japanese yen, and again, stronger gold as the dollar is deteriorating in real value, but making it up in relative value against other countries' currencies or regions' currencies like the euro, the pound, the Aussie, etc., but losing ground against the yen. If the yen carry trade really starts to spark here, this is going to create a drag on the overall market itself. If the inflation print comes out, if shifting sands of expectations on Fed rate cuts change, again, that's the stage where the market may hold up at these resistance levels, right? At right now, around that 50, 61, maybe we push through and retest the prior high, but that's going to be on the back of a weaker dollar, and gold should outperform in that circumstance. So again, a lot of stuff setting up here. We'll have to see the follow through. Now, one of the better performing areas was energy today. This is a very rangy candle. Makes you wonder if we really traded down at 87.50. You can sometimes bring this into a daily chart. You'll see that's a stray data point. Overall, energy was flat on today, a little bit higher off of Friday's close. So again, this is not a real print down here. Well, one of the top holdings, or the top holding, is ExxonMobil, which is at highs. We might break out. But when we look at forward/CL, what would be an indication of that? Well, oil's up 3.6% today. Notice what happens, or what happened today in the term structure of oil futures. What's happening is this curve is getting steeper. We're getting further into backwardation, which is indicating what? A potential shortage. What could be driving this? How about geopolitical risk? So oil's been in backwardation for a really long time right now. That means falling prices as you move out longer in terms of time to expiration. But this is steepened on news. Maybe Iran's going to join the fray. But again, overall, our supply situation isn't fantastic. We have a SPR, a Strategic Petroleum Reserve, that's down, that the federal government's going to have to buy. So we're kind of setting up in a pretty decent position for oil unless we really start to price in recessionary pressures. Well, is there any indication of that? Well, look, I mean, we looked at a bullish trade on USO today to benefit by the backwardation, but in the same product today, there was actually a rather sizable bearish trade. We'll find out what's gonna play out better. But man, buying the 73.5s, selling the 71s here, a big downside bet, not a lot of premium to sell. If you can get at least 10 cents, we're probably worth selling. But the point is, a big downside trade looking at 71 on USO, basically back at prior lows. That would be what? That would be the scenario where dollar strengthens, where CPI is coming in hotter than expected. That's the scenario that's going to create broad-based weakness and potential significant dollar strength, and see further strength in the yen as well. We'll have to see how this plays out, but we're seeing positions mostly on the side of stagflation, which again doesn't exactly mean high oil demand if the economic outlooks begin to soften. But to see a sharp move lower in oil like that, we're going to have to see a really negative response, largely due to probably a very strong dollar pressuring oil and the outlook and the economy struggling, which plays into the stagflationary or deflationary, disinflationary type stance for the market. So again, we look at, kind of building on this deflationary, stagflation result, ITB right now. Well, let's look at the retracement. We had a nice breakout. We had a pullback with the sell-off a little over a week ago. We're at the 50% retracement line. This is a key level. We start to break away from this. This is our seed wave starting at the end, going back to the beginning here. We're looking at 100, right? That's your 161% projection based on the down move here. If we have a bearish breakout from this pennant formation that's been playing out over the last little over a week. Well, today's trade in ITB positioning itself ahead of the CPI data. Let's take a look at ITB today. This is for this week, okay? Start to scroll down in here. We look at the 105 strike on ITB and the 110 as well in here, 3,200, 4,500. What we're seeing in ITB is a ratio long put vertical. Basically buying around 3,000 to 110, selling 4,500 to the 105s. Basically looking for downside movement, not expected to go below 105. That's kind of the outer side here of the fib projections. But again, we could see a more furious sell-off there. But the point is, it's a downside trade, option trade in ITB. I'll throw out another one, FCX. This is on the metal side, right? Normally I'd expect, if the dollar weakens, FCX should go higher. And that's the trade that was made today. So if we look at FCX, this is a SEP expiration. So we'll come out here. We're looking at 4,000 contracts, mostly bought at the 43. Notice we have 4,000 contracts against open interest of 837. Now here's why I'm not certain of this. We talked about SLV. We're getting further and further steps away from a natural stagflationary trade, but this may play out positively. But again, it's going to take a weaker dollar to get it there. Gold generally outperforms if the market's generally weaker. Silver, FCX may outperform if we really start to see the market hold up and we see a dollar disintegrate. But FCX at 43 strikes right about here, so it's not super far out of the money. But we could see maybe a retest of 44 to 46. And again, the upside spreads are not priced well as volatility is falling out here. So more of a stock trade. You can maybe look at a long option. But again, I think the gold trade is stronger and probably has a greater probability of moving directionally higher if we get a weaker than expected inflation print. So again, this would be kind of that tertiary. Maybe we get some follow through if the market holds up. Finally, we'll kind of wrap things up with KWeb. KWeb, this is a Chinese internet ETF. So again, we've had a little bit of movement here, getting back to prior areas of resistance. Again, this is kind of the beginning, but if the dollar begins to weaken, we might see Chinese stocks strengthen into this. As we look at the projection, hit our 261 off of our seed wave down here. But let me just remove that drawing. Let's clear the drawing set, and we'll look at the retracement here. So when we consider how much movement we expect, 1/3 to 1/2 to 2/3 of the downtrend. We're not even at 1/3 yet. We draw the line here from high to low. We're at about a 1/3 retracement. If we push to 61%, that's the 38% of the downtrend, 61% most recent. And if this is a seed wave in the coming weeks, we could this gets a little messy here. We could readily see again 28 to maybe close to $30 here as a projection, or $30 as a trend. We'll see if it can generate that kind of muster. $28 seems to be a reasonable area for KWeb. And again, that's about $1.50 higher. So if we look at, 20 SEP out here, again, 27, 28, 27, 29. The vol skew is favorable out here, 27, 29. You could readily cost maybe like close to 60 cents. Not terrible in a $2 wide spread. 29 is right here. If the dollar weakens, we could see some potential movement in KWeb. And the trade today in KWeb is for it's out for a December expiration here. And it's rather sizable. Again, buying the 31, selling 20 of the 35, buying 20 of the 32, selling the 35. So we have upside call spreads to 35 being financed by selling puts, all part of spreads that you can see down here in time and sales, spread, throwing all those all together. And again, we find these things because we can scan for them on the Thinkorswim software. And again, so it just allows us to kind of bring up, if we look at percent change, you can kind of see what options are moving. Every day I look at this stuff, and again, you see JetBlue, Riley, there's other stuff in your KeyBank, GLD, Mara puts being bought today. Doesn't bode well if we're talking about stagflationary expectation for the market. You can see other stuff in here. So there's stuff I go through every single day. This is kind of a taste of kind of a theme that played out today in lieu of some of the inflation data coming up this week. Well, folks, we're out of time. We'll see you back next week on the video. Hope you have a great one. See you around tomorrow. Thank you.